Welcome to the first episode of the Cryptonator 1337 podcast. I hope you will have fun and enjoy it. Welcome, my fellow cryptocurrency friends. I'm happy that you are listening to my first podcast episode in which I will cover 3 topics. At first, the Bitcoin halving, then the Bitcoin correlation with the stock markets, and my take on altcoins, including my favorite projects for the upcoming 2 years. So, the most discussed topic recently was pretty sure the Bitcoin halving. For the one group, it is a very bullish event, which should cause a further price increase, while it is already priced in for the other group, making it a non-event for them. Before we get into the topic, a brief description for the beginners how Bitcoin mining works and what the halving means. So, Bitcoin miners using extremely powerful computers, so-called ASICs, to solve certain mathematical puzzles. What they have to do is they have to find a specific hash to create blocks. For this, they have to combine the hash of the previous block and the hash of the transactions they want to add with a random number. This random number is found by trying billions of numbers per second till the hash was found. And in this context, the mining difficulty is very important. The difficulty describes how hard it is to find the specific hash. And through the adjustment of this difficulty, which is implemented in the Bitcoin protocol, the reward for a block stays the same, even there is a huge increase of miners. So, whoever solves such a puzzle first receives the block reward, and the block reward is simply the amount of Bitcoin for a fresh mined block of the blockchain, which is currently at 12.5 BTC per block. So, what is happening at halving? It's pretty simple. Approximately every 4 years, or 210,000 blocks, the block reward is halved. When we look back in the history of Bitcoin, by 2012, the block reward was 50 BTC per block. After November 2012, only 25 BTC, and since July 2016, only 12.5 BTC. So after the next halving, which occurs in now, I guess, a bit more than 9 days, the new block reward will just be 6.25 BTC. So logically, the halving changed the annual supply growth and simply halves it. So how is this affecting the miners? So the production cost of 1 Bitcoin doubles for miners when the block reward is halved. And so a lot of small miners will probably be out of business after the halving, as electricity costs are staying the same and benefiting the remaining bigger miners, which could lead us to a more centralization of those miners. But there are great news as well. For example, in China, in the region of Yan, the local government decided to give away stored hydropower for nearly for free or pretty cheap, which would be a great news for the miners there. And this region, Yan, is one of the miner hotspots worldwide. When it comes to the impact for the miners, there's one central key feature which is very telling, and it's the so-called MRI. It stands for minus rolling inventory, and was invented by Bytree, a service for crypto market data. And it simply measures the changes in the Bitcoin inventories of bigger miners. Simply put, an MRI above 100 means that miners are selling more than they mine, while an MRI below 100 means miners sell less than they mine. In a tweet from Charlie Morris, who is the CEO of Bytree, he put it like this: historically, poor returns where miners sell less than they mine, strong returns when they sold more than they mined. For example, March this year, we went from roughly $3.8K to $7,000 in just 2 weeks. And the MRI in the sub $4K area was already above 100 and increased up to 104 almost. Currently, it's still hovering above 100, and what's a pretty good sign is that all those BTC the miners are selling more are absorbed by the market. So this leads us to the impact on price, which should be the most interesting questions for all the investors and speculators, of course, out there. When we look at the first two Bitcoin halvings, they had one thing in common, and this is that the price has risen both times, before the halving and after the halving. Pretty well discussed topic as well as in this context, the stock to flow model. The stock to flow model describes the relationship between the inventory and the annual increase in the inventory of a commodity or asset. So while the economic benefit of a consumer good arises when it is destroyed or consumed, the benefit of capital goods lies in their ownership and subsequent resale. So the halving is important as the growth of supply is cut in half. And Plan B, the creator of this certain stock to flow model for Bitcoin, says scarcity directly drives value. And according to his model, we should hit a price of $100,000 per Bitcoin this year. Yeah, so those are exactly the two groups, or one of the two groups. The one group who is thinking that the halving is not priced in are mostly fans of the stock to flow model, but I'm not sure what to think about it anymore. So in my opinion, no single mathematical model should be used to forecast an investment. While the stock to flow model is helpful to understand the advantage of scarce assets, you should not ignore other factors. For example, something that isn't accounted in the model is the demand side. In theory, when demand plummets through economic phases or whatever, it doesn't help that the supply growth got cut in half when nobody's fucking buying it. And my take is, like, for those who have understood the principle of Bitcoin, it should be clear that the price will rise in the long run. However, I don't think we will get there as fast as the model proposes. Which brings us to the next very interesting topic, and that's the correlation of Bitcoin and the stock markets. So in March, we had the so-called Black Thursday. Everything was tanking, like literally everything. Stock markets worldwide Dow and SP 500 had the greatest single-day percentage fall since 1987. Other stock markets followed. For example, in Germany, the DAX lost 12% in just one day. It was crazy. And what followed was an insane recovery. Like literally insane. Driven by the central banks pumping trillions of dollars into the economy, despite all the bad news, especially the growing unemployment in the US due to the COVID measures. And I mean, fuck man, the balance sheet of the Federal Reserve is over 6.5 trillion this year. So it's so hard to grasp those numbers and to grasp the potential effect on the markets. I don't call them no longer free markets because they can just buy everything. It's crazy. Yeah, money printer goes brrrt, you know it. So while things unfolded and the huge recovery was running, there was a high correlation between Bitcoin and the stock markets. So Bitcoin recovered from the after crash levels of sub $4K to over $9K pretty fast and outpacing the other markets. And so Bitcoin paced out other assets, but was still highly correlated with the stock markets. And there was an article where Marty Greenspan was featured, and he basically compiled data that shows BTC and their SP 500 currently have a correlation of roughly 0.6, which is the highest correlation since January 2011, when the correlation barely exceeded 0.3, which is like no correlation at all. The major question, or the elephant in the room, is why? Why is Bitcoin correlating with the stock markets in this manner? I saw a lot about it, and so there's not one right answer. I think there are several factors important to answer this question or to find potential answers. First thing, Bitcoin matured. Institutions entered the space over the last years. They have access to futures trading, like the CME futures, where we can see a huge growth of the open interest. What's pretty interesting when you look at other exchanges, there the open interest is still not recovered since the crash. And besides that, when we look at the mining companies with huge mining facilities, you have to understand that they operate in cash, means they mostly sell Bitcoin directly to cover their expenses. And through this, as a business, rely on macroeconomic factors as well. Second thing, the central banks. As I said, the Federal Reserve, the European Central Bank, the Bank of Japan, everyone is pumping fresh fiat money into the markets. And so in theory, rising tide lifts all boats. We could assume that it's a reason for the correlation. For example, when we look at the retail section, US citizens got the stimulus check of $1.2K, and there was a pretty interesting statistic from Coinbase where the percentage of buys and deposits that are exactly the same size as the stimulus check jumped from 0.1% to nearly 0.4% when the first checks arrived. So those are the two main drivers. So central bank monetary policy and the fact that institutions are in. Wall Street is observing the Bitcoin price. It's not anymore an obscure asset for full nerds or whatever. So which leads me to my conclusion. In my opinion, the correlation between Bitcoin and the stock markets will probably stay for now, as there is a risk of major economical downturn on the short midterm. We can't know what will happen right now. So I think the stock markets will tank pretty soon. I don't think. What mean I think? I think I know that it can't go on like this forever. It's just not sustainable and has nothing to do with the real world anymore. And I think the correlation will stay. Stock markets will tank, Bitcoin will tank, but there will be a potential long-term decoupling. So I guess Bitcoin would recover pretty fast, outpacing all other markets and assets once again, and finally be able to decouple from all this shit and just do its own thing. And the recent outpacing of the other markets was a great sign already. So whatever happens, I'm long-term bull on Bitcoin. Who follows me on Twitter should know this. On the short term, nobody can tell what will happen if we see a huge decrease of price, if we see a huge increase of price. If you're trading this, stay cautious. If you want to invest in Bitcoin right now, buy portion-wise, don't go all in with your stack right now. You could buy a little bit now, wait for lower prices, which will, in my opinion, and this is no financial advice, will come for sure, and add to your stack. Yeah, so this to Bitcoin. We can be curious what the Bitcoin halving will bring us. And as I know, a lot of you are still interested in altcoins. Yeah, my brave soldiers. And my take on altcoins isn't making so much people happy. I know this. My take is that we will not see an alt season like 2016-17 again. Meaning there will not be a time again where you just could print out the top 500 of CMC and throw a dart on it and market buy this coin and sell for profit a few hours or few days later. I just can't see how this should be possible again. At first, institutions will never touch any small or mid-cap cryptocurrencies. Never. What we would need is fresh retail money, and I just can't see this on the short or even midterm. People will struggle to pay their bills. A lot of people will lose their jobs, and to invest in low or mid caps right now is very, very risky. And if you're not experienced already over the last years with cryptocurrencies, I wouldn't do it I would rather, so if you want to invest in other cryptocurrencies besides Bitcoin, I would rather rely on larger caps with a proven use case, active and secure development, and yeah, great fundamentals. So, which brings us to three of my favorite altcoins out there. At first, there's Tezos. Tezos is similar to Ethereum, a decentralized blockchain environment in which a wide range of projects can be realized with the help of smart contracts. And the blockchain of Tezos was built from scratch and developed in-house, in contrast to Bitcoin mining. And Tezos has something called baking, which consumes much less energy than the proof of work mining when it comes to Bitcoin. And the baking is practically a neologism for staking. And the consensus mechanism Tezos uses a delegated proof of stake. And the tokens are called Tezis, or XTZ as I call them, and they are equivalent of gas at Ethereum. They're enabling the execution of smart contracts, the voting on possible changes of the Tezos protocol, and so on, and are also issued by the Tezos Foundation to developers who have supported the project. A major focus of Tezos is on security token offerings, short STOs. And with such a security token, one receives a share of an underlying asset, for example, a property. And in this way, assets that are actually not divisible and can be shared digitally in the future. For example, a property with a purchase price of 1 million euros could be divided into 1 million tokens. And if you own 10k tokens, it would mean you own 1% of the property. What makes me bullish on Tezos as well is that they have a secured financial background. So they have a war chest of hundreds of millions of dollars. They collected a lot of money in their ICO, but invested this money in a lot of different assets and markets. Something not a lot of ICOs did. There were so much ICOs who collected Ethereum when it was at $700, $800, $900, and they sold nothing. I will not tell you the names now, but a few of you might have those insights as well. So, very bullish on Tezos. If there would be one altcoin I'm investing in, then it would be probably Tezos. Another blockchain environment I really like is Komodo with the KMD token. And it's focusing on the four important blockchain tech pillars, which are security, scalability, interoperability, and adaptability. And is one of the most innovative open source blockchain platforms. For example, they introduced a delayed proof of work consensus mechanism and are the leading platform regarding atomic swaps technology. Other features and elements are transaction privacy, anonymity, next-gen UXTO smart contracts, Bitcoin level security, as it is a fork of Zcash, which is a fork of Bitcoin, multi-chain syncing, decentralized exchange with atomic swaps, and a mass of tools to launch an independent blockchain within the system. And just follow them over the time. During the bear market, Komodo was one of the projects where you can see there are people dedicated to this project and really working hard on it. Other than others where you saw no GitHub editions or anything. They're just dead. So, all good things is free. That brings me to the basic attention token, BAT. It was created by the co-founder of Mozilla and Firefox, along with the creator of JavaScript. The goal is to improve the efficiency of digital advertising. The token utilizes the Ethereum blockchain and the specialized web browser called Brave. You might know it, and you definitely should check it out. The token is used as currency on this Brave platform and can obtain several different advertising services. And in these services, it's designed to be exchanged between users, advertisers, and publishers. And the creators of BAT are seeking to revolutionize the way that advertising is conducted in the digital age, which means users will see less but better tailored ads. Publishers can find new sources of revenue, and advertisers can better target users through documented content preferences. So this were my 3 altcoin picks I wanted to tell you about. If you're not an experienced trader already, please don't trade right now. Look for a setup which allows you to buy and hold, secure your position with a stop loss. You never know what can happen to altcoins, promise me. Work on a proper risk management and stick to it. Most important, stick to it. If you made a decision, don't jump out of the position to hunt other green candles. This will never end well, promised. So, I hope you learned something new in my first podcast episode. I hope I was not too nervous. I guess some of you might heard it. But I'm sure this will getting better as well. So, the next episode will come on next Sunday, same time. Nice that you tuned in, and have a nice Sunday.
When it comes to this lending, we're not going to run out of ammunition. That doesn't happen. We set the interest rates in time at what we think is the right, giving the economy the right level of support. If we'd raised interest rates more, it would have been higher than we thought, and economic growth would have been a little bit slower, so it wouldn't have mattered in the end.